OpenAI possibly valued at $100 billion. Give us a sense. Is this a sustainable valuation? We've seen a lot of tech companies with sky-high valuations, and then when they go to the public market, it just doesn't quite play out that way.
Been so much noise and so much ink spilled about this company in the media over the last couple months, particularly around that boardroom drama in November. I think it's tough to evaluate today. It's tough to really even understand what they have under the hood, what risks are lurking there with this Q star threat that arose that I think led to a lot of that boardroom drama, a lot of unanswered questions. So it's kind of encapsulated everyone's hopes and fears, but certainly it's valuation upside for the AI space, and that's why it's driving so much interest. I don't think it's sustainable today.
How much of this valuation is tied to Microsoft and the use of its AI copilot, the success, the adoption rate? And then also, I want to bounce something off of you. This is a tweet from Sam Altman on Christmas. I'm not sure if he celebrates Christmas or not, but still an interesting tweet. He says, thought experiment. At what rate should you be willing to borrow money to build a data center if extremely powerful AI is close at hand? Give me a sense. I don't know if you know Sam Altman personally, but just this kind of a tweet from a founder and CEO of his magnitude, so kind of a double-edged question. AI Copilot, and any sense of what he's trying to say in this tweet?
Copilot makes sense. I mean, obviously, having an enterprise, a SaaS kind of enabled, merchandisable and commercializable front end to this makes sense. And that helps people get a lot of comfort around OpenAI. The partnership with Microsoft has really aided in its ability to prove that it can make money. And so I think that partnership is robust. It will grow, and they will obviously bring in other partners that don't directly compete with Microsoft. On the data center side of things, a clear secular trajectory for all of us. I mean, data centers have been a huge area of investment for PE, for real estate investors, and have done very well today. One of those few, I would say, asset groups alongside of energy transition and private credit that are doing very well. So actually not too mind-blowing a treat from Sam, and one that I think makes sense in the current context.
All right, so it sounds like you are saying that the valuation is somewhat tied to the success of the Microsoft AI Copilot, the adoption rate, and really how useful some of this generative AI turns out to be.
Absolutely. It clearly provides a product market fit.
All right. I want to pivot over to Shein. Valuation reportedly as high as $90 billion. Surprised at all? At its core, this is an e-commerce retail brand.
No, Shein is coming for everyone's lunch. They, along with their Chinese competitor Temu, who are locked in a proxy war right now in the United States for that kind of fast fashion, a low cost base kind of product across the entire population. So they're not just competing with each other today in Alibaba, they're competing with Amazon, they're competing with Dollar General, Dollar Tree, Uniqlo, Zara, et cetera. And they are also facilitating kind of a fulfilled by Amazon type play, which makes them more of a logistics enabler and a kind of a marketplace for third-party brands. I think they had actually a round that valued them at $100 billion last year. They then had a down round over the course of the last funding year and are now back up, rumored around those levels for an IPO. I think it's a fair valuation. I think that you're going to see, though, a lot of protectionist measures coming against them because they are going to take market share from anyone, particularly Amazon.
All right, last question, very quick answer if you don't mind. TikTok's parent company Bytedance valued at $268 billion. You think that's warranted based on what you've seen from that company?
I do, and I think it's it's on the lower spectrum of valuations today. So there's been a pretty liquid private secondary market to buy up shares at those types of levels. I think it's a company that's worth well north of that, probably closer to $500 billion, and it's trading at these levels, these multiples, significantly below Facebook and some of its other comps. Because of the macro noise, because of the geopolitical noise, because of its name being mentioned on Capitol Hill.